Martin from Secrets, the channel for learning about trading and investing. Welcome to a brand new episode of Markets. Next week, the weekly stock market analysis show, and this is analysis for the week that's starting tomorrow, Monday, July 11, 2022. So, without wasting much time, let's get into the action. Right, these are the charts for the Nifty 50 weekly charts that you see here, Nifty and Banknifty on the right side. Right. So, what do you see here? A big wide range bullish green candle is what you see here on Nifty. On Banknifty also, you're seeing a wide range bullish candle, and it's an open is really low. It's a clear bullish pattern, right? The candlestick pattern is clearly bullish. It's a breakout, and it has taken out the gap resistance that was long holding for several weeks, right? Now that gap is closed in both indices. Banknifty doing it first, and then Nifty following to do that yesterday with the gap up. So we had two gap ups in the last 2 days. You can see it's 4 gaps with the 2 days of continuous gap ups on Nifty and the Banknifty both. That's a daily chart that you see here, right? So clear bullishness, that bullish week is what it went by, right? There's no doubt about it, right? Let's get into more details on what exactly happened, right? So 472 points, it is 3% more than the Nifty did, and it's a 4.7%. That's 1,575 points, forming wide range bullish movement is what happened in the Banknifty, right? So 20-day weekly moving average resistance is where the Banknifty is right now, but no worries there. So the index is attempting to move up after a bounce from the sliding down trending channel. So down trending channel is what is there. It is not still broken out of that. On both indices you can see it's a down sliding trend line channel that you can see there. It's still there. It's trying to break out from that. It's on the upper side. That's what you can see. Daily time frame, what happens, right? So previous close was 0.5%, 0.50% up, forming a hammer pattern is what you see. Hammer does not have any much significance unless it's in the bottom of a trend or the top of a trend, right? So it may not indicate much, but it clearly shows that there is resistance on the upside, and it also shows that the market is not ready to. The bulls are there to buy whenever there is a dip that is happening, right? So that is evident from the hammer pattern that is formed on the daily charts, but daily also 0.5% up, and overall it's 3% and 4.7% up on the both indices, right? So if you summarize, you can see that it's 7 to 9% of bounce up that has happened, right? 7% nearly, and 9.25% of more that has happened in the Banknifty, right? And this was after resistance that was found at the gap resistance, which is taken out clearly now. So now the next question would be whether it will be able to take out 16,800 and 36,100. That's where the previous swing highs are there, right? So if that is clear, then 17,450 and 37,400 is where we have to look out, where the next gap resistance is there. And the Bollinger Bands, if you see, this is what the Bollinger Bands, right? Before moving the Bollinger Bands, let me just explain where the moving averages are there. Look at these charts, right? We have the 20 DMA clearly taken out, right? So the bullish biases and the Bollinger Bands, and on both of them, right? You can see it's far away from the 20 moving average, which is found by this red one, and this blue is a is a 50 DMA that is also taken out, and it is closed above that. Same as happened on the Banknifty also. Now the resistance is at the 100 DMA, and after that you have the 200 DMA at the 36,500 levels, and then at 17,200 kind of levels. So we could find resistances at this moving averages at 16,600, 16,500, 16,800, right? And then 17,200 levels, just 200 day moving average. So all these places resistance can be seen, and resistance also can be seen at the previous swing high levels at this point of 17,457, and then below at 16,800 levels, right? Same here also. 36,200 can face 36,100 can face a resistance on the upside, which is the previous swing low. Then you can have the gap resistance at 37,500, and 37,100 also would have resistances, right? So all of these moving average levels that we have, and all of these previous swing highs that we have, we would have resistances that can be seen, but only if that is cleared, right? Only if that is clear that there's hope of a complete recovery that has to happen. Right now it's nearly half of the recovery from not even half, it's less than half of recovery that has happened from the top. So you never know what happens, right? So Bollinger Bands, you can see that there is a slight expansion that is happening, the beginning of an expansion, you can say, but otherwise sideways is what Nifty indicates. But Banknifty, clearly the expansion has started. That means the price is also moving on, walking on the bands on the upside. So it's bullishness, and here almost the beginning of a bullishness that you can see on the Bollinger Bands, right? So clear beginning of a bullishness, you can say, from the sideways consolidation to a bullishness. That is what the Bollinger Bands are indicating. Look at the Nifty support and resistance levels. You can see how the made support would be at 1600, 16200 levels. Below that you have 15850 to 5950, 5916 levels. Below that you have the supports can be found at 15500, 15650, then 15200, 5350. Below that 15,000 rounding number and 15,200. That's on. So that side, the first resistance would be 16350, 16450, so nice 50 levels also. And then below that 16550, then 16750, 900, and then 70,050, 7,300. So in addition to that, it would have the resistances at this locations of 16,500, 16,600, 16,700. These are all either moving average resistances or previous swing high breach area zones, right? Similar to the Banknifty, if you see, you can see that the supports can be seen at 34,350, 34,750, and then 36,600, 34,350. That's on. And then 33,000 and 33,350. Below that 32,400, 32,800, and then you would have the previous swing low that's at 32,150 levels. Right? On the upside, 35,000, 35,350, 50 retracement level would have some resistance. After that, 35,600 to 35,900, 36,300, 36,800, and then the previous gap resistance 36,900 and 37,500 is where the major resistances will be get cleared. Similarly, there is a gap resistance at 7350, 7400. So right, that's quite far from here, which will not happen in the next week. Right. So in addition to that, all the moving average zones, you'll have to be cautious. Right. The trend. Right now it's resisting at 32,300 level. That's 100 DMA. Then 200 DMA would come at 36,500 levels, and then gap resistance would come, right? And then previous swing high breach area of 36,200 levels. So all these zones would also be additional resistance zones in addition to what is marked here, right? Which is our previous resistance and financial retracement level based resistance and supports, right? So that's the support and resistance level, making note of these points. And moving on, we are getting at the momentum and the trend analysis. So Nifty basically has climbed into this sideways, right, and remains in the sideways, and the momentum is rising, right, on the short term. So the medium term also it's sideways. So overall, Nifty has not climbed into the bullish zones. You can say it's still in the sideways. Banknifty is showing bullishness, right, and the momentum is rising. Banknifty is showing more bullishness than Nifty from the momentum perspective, right, and on the medium term, you can see that the Banknifty is having a sideways and rising momentum. What I have seen now, the trend indicator, which is the ADX, is in the bullish zones. That's the DMI positive, and then the trend strength is increasing in the short term. You can say, but weekly it's still negative. It's in the bearish zones itself, but you can see that the trend is falling. That means it's moving towards the positive. So trend overall short term does change. It's heading towards doing the crossover in the weekly in the higher time frames also, right? So trend is positive, has turned positive, you can say, on the Nifty. Banknifty also the same story. The bullish zones, DMA positive zones on the daily charts, and the rising, and it's rising in the short term. Trend is rising in the positive zones, right? And weekly it has taken a bend and it is falling, although it is bearish right now. So momentum is moving towards bullishness in the Nifty, and already in the bullishness in the Banknifty. On the short term, medium term, it has to still catch up. So that's a summary. Trend indicates that it's already in the bullish zones, right? Let's move on. So this is what we talked about, right? So Nifty yet to move a little more, we'll have to worry whether we would have some resistance that is seen at the Nifty side. So still not happen, but The Banknifty is already turned the bullish on the momentum possibility. This is what we have talked about, right? Short-term bullishness is already there. This is what the ADX indicator green line is saying, that the trend is rising, and it's rising on the positive side. Here also Banknifty also. Now, on the weekly charts, trend indicator is not shown there, but we know that it is already it is still bearish, but it's moving towards crossover. Let's move on and then see what the volatility says, right? So we have seen the price patterns, then we moved on to see what does the volatility says from the Bollinger Bands point of view, and then we moved on to see the support resistance levels, and then we went in to see the momentum and the trend indicators. What do they say about that? Now the real volatility index is the India VIX, although the Bollinger Bands gives an indication on what percentage of move from the standard deviation perspective, but the India VIX is a true indicator of the volatility, which has come down. So 13.5% of drop has happened last week. It's and basically the market has moved up, but right, it's good that VIX has fallen down. The choppiness has reduced a little bit, but um, we have to still be cautious, as to see whether until it moves to that 15 kind of levels, it could again bounce up like it happened earlier. Right, few months back, March, it had taken a dip at the 16, 17 levels, and then it spiked up. So you have to be cautious still, because the uncertainty still remain there. But it's very positive that the VIX has fallen down. Right. So the next one would be the open interest analysis. We look at open interest analysis from the futures point of view. So what are the futures OIS indicates? Futures OIS indicating that there's short covering, right? Short covering is clear bullishness, right? People have gone a short covering is now switching their positions to the long, right? So that's what is happening in both indices. So futures OIS is showing short covering on both indices, which is clear bullishness. And foot call ratio, that's the main thing, right? Foot call ratio is continuing to be at bullish zones of 1.09 and 1.07 on both indices, right? Which is again bullish, right? Now the levels that we'll be looking at for the July 14th weekly expiry that we'll see in the next slides. Look at this. The expiry for July, so 16,000 and 16,200 is where the highest put and call writing is seen. So right, it's a very close range of 200 points. We have 4 days for the expiry to come in for the weekly expiry, right? And the highest put writing, the second highest put writing is seen at 16,200, and after that it's seen at 16,900. That's a wider range, but yeah, that's where it is. So it's a very narrow range, and open is OI data on the OI data on the options also is showing that there is bullishness, because we can clearly see that the number of put writing is what is dominating as compared to the call writing. Banknifty 35,000 and 35,500 again is very small range. Several days before the expiry also indicates bullishness. 34,000 and 35,500 is the second level of highest put and call writing that is seen, and 1.07 and 1.09 is clear bullishness PCR. We have already seen that. Short covering build up on the futures also here. So overall, the futures and the options are high for both indices, indicating that there is bullishness. Sectoral watch, almost all the sectors. Actually, almost all the sectors moved up last week, right? The big moves happened were the auto and the FMCG, which is 3.4% up more in the auto sector, and 5.6% of the FMCG. In reality, also did well, right? It's closed nearly 5% up, right? So, from the moment of possibility, the bullishness is evident in the auto sector and the FMCG sector. Both of them have turned bullish in the short term, although in the medium term it is set to catch up. So, right. So but in the auto sector is already caught up. So auto is the number one bullish, where you can bet on long trades, because it is turned, the momentum possibility was turned bullish on both time frames, on higher time frames and the low time frames, weekly and daily both, right? So auto is as also we'll be looking at the charts also in the next slides. IT is kind of flat, nothing which happened. Metal is struggling, right? It is trying to retain, but it has turned into the sideways. So almost all none of the sectors are bearish now, right? In the short term at least, right? So IT is turned into sideways, metal is turned into sideways from the bear zones. Pharma is also in the sideways, both time frames, and reality also is short term turned into bullishness, although medium term it is still, the weekly charts it's still sideways, right? So we have three sectors which are turned into short term bullishness: auto, FMCG, and reality, right? And auto, it is bullish on both time frames, which is super bullish, you can say. And so these are three sectors we just watch: the auto sector, FMCG, and reality. Other sectors are all catching up, but none of them are in bearish zones as of now, right? So that is an across the sector move is what you can see, and we already identified, where to bet on. This is what sectoral analysis that we are talking about. Right? Reality, you can see that it is clearly giving a green close above the support zone, where it was consolidating and where it has fallen from in a trend line channel down move for multiple weeks or months, you can say. So that's what you see there, and yeah. So remember, so that's the reality sector, right? And if you move further down, you can see there FMCG, which is clearly having a very wide range bullish candle, right? And remember, there is resistance to the upside, so unless and until that is taken out, you have to be a little cautious on the FMCG side, right? Momentum is clearly on the weekly medium term, it has climbed to the bullish zones. Right? Now moving over the farmer, you can see that it is corrected a lot, right? It's recovering, and it's just managed to climb back on the momentum sideways on the medium term, right? And auto sector, we can see clearly it is broken out of a 2017 resistance and closed just above that. So this the momentum is also on weekly term also just turned bullish now. Metal, you can see that there is a reversal attempt that is happening, but too early to say. It just managed to climb the momentum in the medium term. Right, you can see that it is consolidating after a bounce up. Whether it will take out the resistance one by one, is a gap down that has happened here. It's a major resistance one. It will take some time to break that. Weekly, it's still bearish, so you have to be cautious. But it is kind of consolidation in close green, at least, no. So, and the momentum has turned into the sideways of the short term, definitely, on both the indices, metal and IT. But the short term also, the short term is already recovered. Other time frames it is trying to recover, and right. So this is what we are watching for: Nifty Auto, Nifty FMCG, Nifty Reality. Right? Pharma is still catching up. It's in the early stages before you can say that it will make big moves. Right? Index heavyweights, HDFC Bank, rising momentum, and a good green white ridge can close above the support zone. And so it is recovering, and then until 1545, it's going to be. There is a gap resistance on the upside. It may take some time, but that's the next resistance zone, major resistance zones. Gaps at 1463 also good, find trouble. Remember that the HDFC is not yet bullish in the medium term, but in short term it is catching up. Now HDFC twin HDFC term, not the bank, that is also showing a green close sideways. So all of them basically sideways. Lands seems to have taken a support at the within Gravestone Doji kind of pattern, showing the selling pressure from the top. It's a couple handle breakout which is done its job and then retraced back to the neckline. Now if this neckline is breached, you'll have to be cautious. Overall, it's a sideways movement that is happening. How long it will consolidate this zone, or would it fall back like what HDFC did, is what we have to watch out for, right? But looks like it may be consolidating at this zone at the neckline, and then it may attempt to move further up and then do another breakout from the all-time high levels. Right? That's what it indicates. But as of now, there is selling pressure that is seen, there is sideways action that is seen on the reliance industries as well. So these are the main index heavyweights, HDFC and so medium term and Reliance. Basically, in the medium term, these two heavyweights of HDFC and Reliance both are in the sideways zones now. Right? But it is kind of at the support zones, and then worries is what it looks like. Now, in Infosys, you can see that there is a turnaround in the IT sector after a big correction that has happened, aligned with the US markets, right? So this is also set up to climb back into the trendline channel, but it is facing selling pressure at the resistance zone. So when you close above this resistance zone that you see at 3400 is what you watch out. Whether it's able to break that and then continue its consolidation or further breakout from the 4000 side. So it's facing its resistance after the reversal. Take some time, but at least the momentum is sideways on both Infosys and the TCs also you can clearly see. Now look at that recovery from the ICICI Bank. Momentum is rising up in the medium term and the longer term also. It's clear bullish clear bullish white range candle. So that is taken out and closed above the resistance. So now it would be easy to go until the 840 levels of the next resistance level. So momentum is in the sideways and rising, medium term also, and daily time frames also it's bullish. So Kodak Bank, as I always say, this is a major support zone, and it is not ready to give up that zone. It is consolidating in another attempt to bounce up. Probably it may move further up till the 1924 kind of level where it would either break out that or then hit the resistance and then fall back and to do zigzag operations, right? As it has been doing for a very long time. But one thing is clear that it's not ready to break down from this 1600 kind of levels. No, it's a good support zone that you have here on the medium term. You can see that clearly it is always taken momentum support also at the RSI 40 at all times, and then then bounce up and then hit the resistance and then comes down. So this might take a long time before it breaks out, right? But right now, the longer the uh, consolidation, higher would be the chance of a big breakout to happen, right? Right. Now it's weekly charts. Weekly also you can clearly see that it has been consolidating for multi years, right? So it will take long time to break out, but it has got very good support. Is what it looks like Kodak Bank, right? So overall, if you see the heavyweights, we don't have a big mover as of now. If you see that ICICI Bank only, none of the heavyweights are in the bull zones yet, but all of them have gained the momentum and moving up. At least HDFC, ICICI Bank, and actually the HDFC and ICICI Bank, the banking stocks, banking giants are, are gaining the momentum and moving up. Infos also may come back, but as of now, uh, none of them on the medium term is bullish yet. Right? But uh, yeah, momentum has caught up is what you can understand. So that's about the industry heavyweights and the sectoral thing and sectoral analysis. And then moving on, what happened in the institutional participation last week? Look at the selling that has happened. It's just 2,200 crores of selling that has happened for the Fyers last week, right? Imagine they were selling that 15,000, 20,000 crores, a week. It was kind of selling that was happening 2 months back, but it has now come down. So reduced FI selling is hopeful, but still, the fact remains that FIs are continuing selling and not yet into the buying mode. So the market has to move for a rally, means FIs has to come in and buy, which has happened only once in the last week. The entire week, it was just one day of FI buying that has happened, right? Where they bought some very small quantity of 1,300 crores or something, right? So overall, it was net seller on the FI side. DA is as usual. They have been buying, but they have been buying less last week. So the derivative point of view, net longs have also moved up last week. You can see. So that's about the institutional participation, giving some hope on a reduced FI buying, but don't know whether it's going to sustain the coming weeks or not, right? Earnings results and all that comes in, then we'll have to see whether the FIs will sell out whatever is left again, and then make the market to crash again. So that worry is still there. There's some hope that has come in the last week. Going on to the global markets, you can see that the US markets, these are the US markets, the indices, the Dow Jones, the S&P 500 and the Nasdaq and the S&P 500. All you see here down is the S&P 500 and Nasdaq is 100 stocks up. The index weight of the 100 stocks and Dow Jones. Right. Dow Jones, so we are recovery after a from support zone, so a clear recovery is seen, and it's a green close that is there last week, but it has still not managed to close above. So 1 to 4% of move. So Dow Jones didn't make big moves, but 1% of move happened. And the bounce up in the other two indices is Nasdaq has some 4%, and then S&P 500 is some 2% or something. So 1 to 4%. So the green close good, but it is not able to close above the previous week's candle high. So that is worrying. So whether it will sustain or not is worrying. The momentum now, which has dipped into the bearish zones, all the indices have caught up and they're now in the sideways zone, which is giving some hope. So global markets, especially the US indices, which is the greatest impact on the markets, is showing some green. It is recovered from the bearish zones and then now in the sideways. Whether it sustain or not is a big question. So the answer to that would lie in if the Dow Jones previous candle high can be cleared or not. At least if there is a green close that's happening above that, then it gives some hope. Otherwise, we still have the worry whether it would be making another swing high and then lower low and then further make a new lower high and then further make a new lower low. So that would happen. Same like our indices. So this is a trend line downtrending channel. It's a parallel channel also. It's on the edge where the bounce up happens. You can clearly see that there's a swing high, swing high, swing low, swing high, swing low. That's pattern that's happening. Whether this 31,941 would be taken out or not, no, it's the first question. Second would be whether this major support zone from where it had slipped down since last many weeks, whether it will be able to give a close above that. So a lot of things. So this views indices has, all of them has to be watched very carefully, right? So overall, it's a green week that has happened for the US markets. Good for us also. Now the worrying thing is the dollar index is moved up 1.6%. That means the dollar is shooting up, right? Although it's not directly not correlated, you can see that the USDINR value also has moved up nearly 0.5% up. An all-time new all-time high 79.27 is where we average. So rupees at the weakest point, you can see. So, but the good thing that has happened is the crude oil has dipped. Whether it will sustain or not is what you can see. You can see a clear dip below the 100, even to very close to the 95 kind of levels is what happened. Which has happened after several weeks. Way back in the March or something, that has fallen to the 95 kind of levels. So it happened, but again it bounced up. You can see that. So whether it will consolidate here and maintain a level that's below 100 at least, would be something we should watch. And last month's up move in our markets has a lot to attribute to this dip that has happened in the crude oil. Now, another interesting thing that has happened is gold. Right? The gold has crashed, and the last 4 weeks you can see that it has clearly crashed down, and a big fall from the 1876 level to the 1741 level. So big downfall has happened. See the momentum. The momentum was dipped into the bearish zones, right? So the gold could not sustain the move that it had made in the March, and then from then it had clearly trending, making swing highs and swing lows, and then it's trending downside. And now the question is whether it would hold on at the 1678 levels or not. Most likely it is likely to move down and then take a support here and then continue its journey upside. Remember, it is having a couple handle pattern on the medium term. So gold is not giving much hope for those who are relying on it for hedging, right? But the markets are recovered and moving up, so it should be fine. Both the markets and the gold is moving down means then maybe a problem, too much of a problem. But as well, that's not what. So basically, yeah, gold takes a lot of time to break out and make big moves. Otherwise, on a medium term, it would just be consolidating until it makes that big mega move over a very long time. So long term investment is what gold works out well, and not for short 1 or 2 years. Right? And crude oil dip we have already seen, and so overall there is some positivity that is coming from the crude oil dip and the US market up move. Not really up move, the momentum catch up that has happened last week. That's what we can understand. Now that's the end of the analysis. We'll get into the wrap up. Before that, some actionables, right? 2 stock picks, ABB India Limited, and it's having a very bullish breakout that has happened from all-time high levels. You can clearly see that the rounding pattern failed first, and then another rounding pattern happened, and then look at this candle. So mega bullish, big mega bullish momentum is high, volumes up super high, and trend is turned high. The positive zones, right? So ABB India is a bullish, but the thing is, because this big move has happened, it is likely that there is some downfall to the neckline. Can happen. So the entry is very crucial, and we'll have to watch closely the daily lower time frame charts and then see when does that consolidation or the pullback ends. So if if a moment is happening above the high of this candle, then clearly there is an entry. But if there is a retracement is happening, there is a likelihood that it can take a support near to the neckline. So keeping that as a stop loss, the entry has to be made when the candlesticks are indicating that it is making a higher close above the previous candle high or something like that. So it's not it's not advisable to enter straight away when the next day opening. So don't do things like that. Always make alert candle high would be the entry point, and if that does not happen and a retracement is happening, is go for the watch the daily time frame short, lower time frame chart candles, and then make the entry accordingly. And the pick is last in turbo. It's also breaking out of the major resistance zone, which is around rounding pattern, and something like a copper handle uh, uh, is what the pattern looks like. Momentum is still on the medium term in the sideways only, but the candlestick breakout has really happened. So similar to what I said in the ABB, there could be some retracement, which would give a good entry point on the lower time frames, which is neckline as a support zone, as the stop loss. So that's how the entry has to be done on the last minute turbo and ABB India. Long picks for the next week on a swing trades, which could be 2 to 4 or 5 days of swing trades. And you may get stopped out, right? But it'll make you another entry opportunity later. So it's fine to get stopped out. Right? But the stop loss would definitely be at the neckline zone. So another actionable is on the indices of the option strategy. That's a double diagonal color risk. That's what we come out with every week, and right. So it's basically giving a POP, probability of profit, of 73%, and then you can clearly see that yes. So there is a reason for thinking of this double diagonal color spread. Is basically it's nothing but you're selling the near month put and call options at the levels of price points that's coming closer to 30 kind of levels, and then we're hedging them with the far month, the next month's, next week's, I'm sorry, the weekly spread. So taking hedge positions at the both sides, P and the C side, right, put and call side. So you can clearly see that there's a property that's good, right? And the risk reward ratio is also reasonable unless and until we wait for the last day, right? If you exit early at 1 or 2% of profit, then it can consistently give profit. So break even range, you see, that's what the most attractive thing is. The problem, so it's about balancing the probability of the profit and the risk reward and the range that we are getting. The range is because the volatility can give a price movement that can take you to the lowest range. So look at this range here. So we are safe as long as the price does not breach the 15,800 levels and 16,600 levels. Right? So it's a very good range that we are getting here. So no other strategies would give that kind of a range. So, and if there is a dip and then there is a rising that is happening in the volatility, right, double diagonal spreads would give advantage because of the far month option buying. That could help you out from the Vega benefits also we can get by using this, right? So overall I find that this strategy of double diagonal calendar spread can give consistent profits, right? As long as you are not greedy to keep it till the last day and get the full max profit. That may not be possible. The portion sizing has to be taken as per your capital size. Remember that if you are taking, since the hedge portions, the capital that is required is very less, and again, it's completely risk demand. You don't have your capital getting wiped out for the next day. So it's advanced. So this is the wrap up. So what we saw last week was clearly a wide range bullishness that's evident. Right. So what all things happened? Right. A lesser volatility on the India VIX. Right. Which is below 20, it's clearly it's giving hope that there is bullishness ahead. Put call duration in the options OI clearly bullish. Short covering build up in the futures OI, that's also bullish. Short covering it's clearly bullish. Momentum is rising. It is already bullish on the Banknifty and it is rising and turning towards bullishness on the Nifty. And a trend that is in the DMI positive zones as per the ADX indicator. Right? Clear trend positiveness is happening in the short term. Right? And there is reduced selling for the Fyers. Bollinger Bands expansion is happening in the upside, which are bias of above the 20 median. So Bollinger Band consolidation to expansion is what it indicates as of now. All of this indicated that short-term bullishness. So my view for the next week is mild bullishness. But now the US market is showing weakness and resistance, although it has a green close, which is good. Right? 1 to 4% of move has happened, but There is resistance because it does not close above the previous candle. So we don't know what will happen. So this very close discrepancy in our market, and you have to keep a close watch of that. The global resistance fear is there. RBI report rate hike is there. US Fed rate hike is there. Inflation worries are there. Russia-Ukraine war is there. Oil, crude oil crisis is there. Rupee weakening. All of these are uncertainties that are still there in the market, right? So, got to be cautious. The positive factor is that the market is not ready to crash big and then go down to 10,000, 12,000. It's not crashing that. It has done a reasonable correction of very good amount of 20% nearly, and 15 to 17. That kind of correction has already happened, and now it's not ready to crank down. It is trying to deal with inflation and all the uncertainties, and then every time it goes below that 15,000 range, it's getting bought up for multiple times. So as long as that is not breached, and you don't have to much to worry, but that's a positive factor. Now the VIX is less than 20, but you still need to be cautious because 18.5 to 20 is very small percent of spike up that can happen. So it can turn volatile again because uncertainty is still in the market. So unless it dips to that 15 levels, that is not likely to happen with all these uncertainties. As long as that is not happening, it can spike back to above the 28 range line. So close above the 16,500, 16,484 to be precise, and 36,083 on the Banknifty. So that's the points that you have to see. So that may give a hope of full recovery if it moves above that, because that's a previous swing high, and that's breach means the market is not likely to make another price lower high pattern, and it may be turning around and made up for bottom. We can assume like that if the price moves and breaches these two levels of the taxes. Until then, we are again uncertainties. Remember, there is a gap resistance also. After the swing high is taken also, that would be the next right targets. So a lot of resistance is to be breached before we can say that a full recovery is likely to happen or not, right? So there are uncertainties in the market, as I said, so you have to be cautious. So always protect your investments in the long term by using strategies on like covered calls, or invest more in the SIP mode or cash secured puts. So there are ways to deal with the investments that you have said. But if you're trading and do not take overnight risk, you can always have hedge, and it gives you margin advantage, and it is risk defined. You know what exactly you'll be losing, right? So intraday, obviously it is obvious in Ladu. Scalp is the only thing that works, right? In intraday, and then identifying the candlesticks and other indicators to quickly catch when is a small up move or that down move that happens ends. That price action based trading is what works in intraday. Overnight positions always hedge, and then protect your capital with option strategies like our call, and invest more at when the price goes down, and get quality stocks only for quality stocks. That's key thing. Protect your investment stocks only if they are high quality stocks. Otherwise, just get out of that when the market makes new dips, right? So that's a wrap up, right? Mild bullishness is my market view for the next week. So I hope this helps you to frame your own market view for the next week in some way. If that helps you, consider hitting the like button and the share to maximum. We have very few subscriptions. I appreciate your help in this regard. Thanks for watching. Happy trading, happy learning. Bye.